Few days ago, the market was totally red. The heat map of the S&P 500 was red. Everyone was seeing blues everywhere. And now it's green. Today it's fully green. And some people already start saying that it's a rebound. Okay, finally the tariffs and so on, we overreacted. It will be all sorted. So now it's all green, all going up, and people start maybe thinking that we'll be back on all-time highs. Whatever the future will be, I don't really pay attention to this. I don't pay attention to geopolitics. I just focus on investing on high quality business with great moat at a good value. And there is 3 companies that I selected for this video that I would like to invest in them, but for now I still didn't because I find them a bit too expensive, and I would like to have maybe a new panic on the market with 15 or 20% decline more, and to probably enter on this company to open a position. So the first one is Mastercard. We'll obviously see the valuation of all of them in this video. So Mastercard or Visa, I want to precise here, both are great business. Mastercard have a little bit more growth than Visa. Visa is a bit more implemented everywhere, but I really like them both. I pick more Mastercard because it have higher growth, but mostly because I feel that we're closer than Visa to be at a value that interests me to enter. Maybe it will be Visa which will go faster to this value, so I will enter on Visa, but both of them I would like to have in my portfolio. I will obviously just pick one, but it's interesting. What I like with Visa, it's with Mastercard and Visa, it's the margin, the gross margin. So it's not 100%, it's a bit less, but it's still incredibly high. The operating margin 58%, okay, is a free cash flow margin 50%, the net income margin 45%, which use. Now it's a price to free cash flow of 31, okay, and a forward price to free cash flow of 29. I would like probably to buy it when these go under 30, around 28, but we will see how it goes. Since the last 10 years, we had a significant outperformance compared to the S&P 500, okay, and it's really a great company. Like, I don't see any moment where we don't have Visa or Mastercard in the world, or maybe with some blockchain payment and so on. And even with this, I'm sure they will manage to find a way to get in and to stay in. So for me, they have a great moat, and it's a company that in 10 years will be way bigger than today. So that's why I would be happy to own it. When it's come to valuation for Mastercard, if we go with an assumption that we'll have a growth rate around 13% per year for the net income and 2% buybacks, okay, because it's a company that do buybacks. Visa and Mastercard do 2.3, 4% buybacks. So 2% buybacks. And if we have a P/E ratio in the future of 26, so in 5 years, the P/E ratio is 26. I prefer always to be conservative with all of this. If we want 13% per year performance, we will need to buy it around $418, which is, the stock need to decline by approximately 16%. So if we have 16% decline on Mastercard, I will be very happy to buy it. So I will take a bit less margin of safety to buy, in the sense that if we have like only 10% or 12% down, I will probably start buying. Okay, I will not wait that it's exactly 16%, but this is the fair value that I'm looking for, something around $420, $425. When it's come to Visa, you see we have a little bit more decline. If we have a growth rate of 9% with 2% buybacks and 26 as a PE ratio, we need the decline of 21, 22%. So I would be eager to buy around $250, $260. Okay, now the company is at $320, but this is what I would like to have as numbers for this company to potentially enter. The second one is Ferrari. So why Ferrari? This is also something a bit more personal, because for me, when I think about car, I think of 2 brands. If I want a car that is very reliable and that I will use, let's say, every day or things like this, my first guess would be Toyota. Toyota, great, like the company. I will not invest in a car company or things like this, like Toyota, but it's, you know that the car will start when you will try to turn it on the morning. Ferrari, it's when you want prestige, when you want prestigious car, when you want like nice engine car, nice sound car, nice looking car. I think all the time Ferrari, since I'm a child, it's like I always wanted to have a Ferrari. I always, like, it's my dream car and so on. So Ferrari is as well a company that I would like to have in my portfolio. The business is great, so there is a huge moat. Okay, not everybody wants a Ferrari, but you know this sentence: everybody is a Ferrari's fan. So this says long about the brand, the recognition of this brand. You have high return on invested capital. Okay, we'll look a bit more in this. So let's go to some ratios. So you have high operating margin, okay, 28%, higher than 20% since a decade almost. Gross profit margin higher than 40, now 50%, so huge margin. It's a company that can increase the price of their vehicles with inflation, which is great. And even without inflation, they can increase. Return on invested capital is very high as well, over 20%. Return on equity, very high. Return on capital employed, very high, almost 30%. So great numbers for this company, great quality. What I like as well, compare for example with luxury brand like Hermes or LVMH, is they do buybacks. While the others don't really do buybacks, they do buybacks, and they have a buyback of 0.5% per year, which is not a lot, but still it's something that is appreciated. Another thing which is nice, and it with those luxury brands it still exists, it's this. The Ferrari family is still here. They own 10.6% of the company, and if you look at the holders, you also have Giovanni Agnelli, which hold 21%. So you have two people very involved with this that hold a significant part of the company, and it's something that I like. When it comes to valuation, okay, so at a price of 371 euro with the earning predicted for 2025, if we have 10% growth rate and they continue to do 0.5% buybacks for the next 5 years, and we have them at a PE of 35, it means that I would like to buy around 280 euro. If the stock decline around 280, 300 euro, I will be happy to enter in the company. And same, I'm kind of conservative with the PE, because a PE of 35 for Ferrari, I don't know if this already happened in the past. I think the lowest PE that they had, was 18. 18 is a great PE. So it was 18 here. And the median is 39. So I want to get under the median. I think I would like something around 35, which happened in 2022. Or even in 2020, we got down to almost 30. So I would like to enter in this price range for the company. So it represents around 280 euros at this price. I would like to buy. The third one is S&P Global. Okay, everybody know S&P Global, S&P 500. They own it. Okay, they have royalties. Every time that somebody is using the index, they also have Dow Jones index. They have the credit rating agency, which is one of the 3 biggest credit rating agencies. Some company only want to have credit rating from S&P Global, Moody's or Fitch. I did a full analysis of the company on my channel. You have the link in the description to watch the full analysis. So I will go a bit faster here. What I like with this company is it's well diversified. You have revenue coming from different streams. You have 10% here, 10% here, 10% here, 10% here. They're very good. They're doing great acquisition. They create great synergies with their acquisition. They're very old in a sense that they exist since 1860. So it's not a new company. They're in the business since a long time. So, and they're still here. They're still doing great. So it's a company that I would like to buy soon, yes or no. It's a company that I want to buy during a big drawdown on the market, because in 2008 it got hit really hard because they're in the middle of all the problems that happened in 2008. So I'm not saying that they will have a similar situation now, but if the company really have a drop and we have a big opportunity, I will enter. Now, it seems to be around 450 to be a value, which is kind of fine. It's not overvalued, but it's not undervalued. And I would like to enter in this company when it's really undervalued. If we go with 12% per year growth for the net income with 1% buybacks every year, okay, and we look for a P ratio of 28, you will need to buy around $385. $385 will be a fair value, okay? And this is if we want a P ratio of 28. If we want a P ratio of 26, we will want around $360. So yeah, I think between 360, 385, it will be somewhere when I would like to enter on the company, to open a position on it. So that's all for this video. Let me know in comment section what are the companies that you're following, which one you would like to buy if we have a big decline, if you want to take some opportunities on the market, which company like you wish, let's say, that they totally decline to be able to enter. Let me know all of this in the comment section.